The Ricochet was a byproduct of the study of the market makers' action inside the markets. I was attempting to figure out where the market manipulators were actually going to work inside the markets. I felt like if I could find them, then I would know what comes next. If I could study when the markets were being manipulated, then I could anticipate or at least study what happens next. And if it was the same thing on a regular basis, then I could find an edge to trading. So even though you hear a lot about there's no such thing as a leading indicator, it was my mission to figure out what is happening right now so that I can anticipate with a high degree of probability what's likely to happen next. So that was my study, was trying to find where the market makers, the HFTs, the big boys, the smart money, are manipulating the market. To do this, I started studying time and sales. I was trying to pick out through time and sales when I felt like the market makers were generating the majority of the orders. I found this extremely difficult. But what I noticed during that study was the speed at which the orders were coming through. To my surprise, these orders were not happening during high volume times, yet the speed at which the orders came through was going much, much faster at certain times. And during these times, it was not uncommon to see price stop and turn. So I shifted my focus to the speed at which orders were coming through, not the volume of orders coming through or the size of orders coming through, but the rate at which they're coming through. So I started thinking of time and sales as more of a speedometer rather than reading the volume or size of the orders. In order to get a handle on this over time, I created a histogram to help me understand the rate at which the speed increased and decreased. So I applied this histogram to a chart and noticed that certain things happened when price suddenly got much, much faster than the previous bars on the histogram. When the previous bars in the histogram, or the speed of the order, suddenly jumped, it was not uncommon right after that to see price stop and turn. So applying that histogram, now on the Ricochet, the product ships with that histogram. However, most traders don't put the histogram on the chart and simply use the indicator to show when orders coming into the market have suddenly increased in speed. And when that happens, it's very common for price to stop and turn. You see this on a 5-minute chart, a 15-minute chart, a tick chart, and a range chart. You can use this indicator to help identify where pullbacks from a trend are likely to happen and take advantage of each of those pullbacks, or you can use this indicator to help you scale out of a trend and avoid a complete trend reversal on your trade.